All right. So we are live on YouTube. So welcome everyone to the Commercial Cash Flow Show. Excited to be here with some of my good buddies from across the world, really. I mean, Chad's hailing from Canada. I'm sure it's quite cold up there right now.
It is
And
cold.
getting pretty chilly down here too, which I'm not a huge fan of. And Logan, I'm sure it's probably warmer than it is here for me. So I don't know how you're doing.
Yeah, it's good. I'm actually traveling this week, so I'm actually in West Virginia, so a little colder than normal, back in my old stomping ground. So I am visiting family. I'm actually in my parents' basement right now. So if I scroll around, you'll see this is like my mom's craft desk that I'm currently located at. So
Is that your old stomping ground from when you were a kid? Did you grow up there?
It's actually not. They bought a new house and moved here, so this is relatively new. But that would be cool though. But no, it's very cold here too. It's very cold for us at least. It's low 30s. So
yeah, that sounds actually balmy right now. I take low 30s all day right now,
any day of the week. What do you call? I mean, one of my buddies is looking to do like a trip to West Virginia. Apparently, there's some good skiing out there.
Oh yeah.
So he was mentioning. So
yeah,
that was it.
Yep, snowshoe. Yep, yeah, it's a good spot. Yeah.
And it's within a few. I mean, it's like 6 or 7 hours from here, I believe. 6 or 7 hours away, I think. So it's not too bad of a drive if you need to do it. But yeah, I haven't been skiing in a while, so it's something that would be nice to do at some point.
The whole southeastern part of the state is really nice. There's between whitewater rafting and that type of things. There's stuff to do all year round if you're an outdoors person. So
definitely, yeah. So how's everything going in your neck of the woods, Chad? Give us an update on everything that you're doing.
Yeah, I'd say the biggest thing that I've got on the go right now is we just finished our office renovation. So it's a building that myself and 3 partners bought 2 years ago, and we bought it with the intent of doing a full renovation for our brokerage office. And we just wrapped that up, like literally in the process of cleaning it right now. I started moving my stuff back in from my office. We're doing a wine and cheese today. So hopefully those last few items can get done so we're not tripping over buckets and pails and cleaning stuff. But it's exciting. We did a full renovation of about 7,000 square feet of office space ground up. We're also in the process of doing a full exterior renovation on it, but we're a month or so behind on that. But that's a very exciting project. Definitely the most elaborate process I've ever been involved in, both in scale, size, dollar cost. It's been a long project, but it looks super awesome, and they're really excited for it.
Oh yeah, no, that is awesome. And now you have the experience of doing that, so next time you can move if you want to move and do something similar. It's something that you have experience in now. So
yep,
that's awesome, man. And obviously whenever you add wine in the mix, I think it's probably going to be a good experience, good time.
There you go.
Yeah, after this process I might need something even heavier than wine. That might not that might just be the warm-up.
There you go. There you go. You said you're a Scotch fan, right?
I am. I love whiskey.
There you go. I've got a bottle of Glenmorangie and a bottle of Johnny Walker upstairs. So that's going to be some Christmas cheer for me later in the week.
I'll get you through Christmas just fine.
There you go.
You got it. I'm in Kentucky, so bourbon's the way to go.
There you go.
I go with the bourbon.
Yeah.
Have you tried any of the hard to get ones? Or are you able to get any of like that Pappy Van Winkle or any of that stuff?
I've tried it. Yeah, I've tried the 20-year actually before. It's good. I mean, for what you pay for it, it's kind of like, I don't know if it is, but there's some good mid-range like bourbons that are like really good. And one of my favorites, I mean, we got several. Buffalo Trace, Weller, like the mid-level Weller is like really good. And Buffalo Trace products are really good for that I really enjoy. So, but yeah, how about you, Logan? How's everything in your neck of the woods?
Things are good. Things are very good. We're a couple partners and I are placing a few offers. One is a large undertaking. It's a 105,000 square foot facility.
Wow.
Where currently about 30,000 square feet is occupied. But we're going to be bringing a tenant to the table who is looking for a space, can't find a space, and this is kind of perfect for them. There's probably about 50,000 square feet of it that's perfect for them. So the thought would be, hey, we're thinking about buying this property, needs a little bit of rehab. It's already got 30,000 taken. We put the tenant in place there and then go lease out the rest of it. So a little bit of risk with it being vacant, but kind of our caveat to getting into it is, hey, if we buy this, you're signing a lease. They're on for that. The tenant actually wants to own part of the building, so they're going to be an investor as well. So it's a good deal if we can get it all done. It'll work for all parties. So excited about that. Hopefully I have some more details on that in the next month or so, and I can share a little bit more of the details with you guys. So good stuff.
Yeah, that'd be awesome to hear more about that. Keep us posted.
Yeah.
What
sure.
about you, Raphael? I know you're finalizing the latest book you've done. What's new on that front?
Yeah, so I finished my latest book, Before You Buy That Building, The Small Business Owner's Guide to Buying Commercial Real Estate, and that finished that in November. And then, obviously the brokerage side got super busy, so I wasn't able to really focus on, the ancillary stuff you need to get done, like the cover and everything else. And over the last week or so, I've been getting back on the horse on that front. So we got all the book formatted. We're converting that into an ebook version, and then I did a photo shoot yesterday for the cover. And we're going to be trying to roll out some designs here in the next week or two. And then the effective launch date is what I'm trying to get to, is the first week in February is what we're shooting for. So that'll be ready to go in that period of time. On the brokerage end, everything's been going well. I finalized a few deals before the end of the year, and now it's just planning for 2022 and, hitting the ground running and try to make 2022 my best year yet. And on the development side, my friend Jeff, who you guys know, I believe. I don't know. Yeah, you did as well too. You were on the podcast. So we've been looking for our first investment property. Next week we're looking for a property next week that could be a good fit for our first deal. So we're going to see what the efficacy of it is as far as the investment opportunity is concerned. So that's everything that's happening on my end, and it's been good. It's been a great last several weeks, and I'm excited for 2022.
That's very cool. It's awesome that we're all active brokers, but also pursuing deals, because I'll just find it fascinating just to hear what you guys are doing over the upcoming months and going into 2022. So it's I look forward to just jumping on these calls and chatting with you guys just to see the journey.
Oh, for sure. Yeah, no. And I think we each bring a different perspective on the analysis piece, and really just an overall approach to our brokerage business and investment business. So, it's always great to kind of converse with you guys, and we seem to have very similar, ideas of where we want to go. And so it's always great to surround yourself with people who, inspire you to be better every day. So,
yeah, absolutely.
Definitely. All right. Well, let's go ahead and dive into the piece where we analyze some current news in commercial real estate. I know, I found a pretty cool article that I'm excited to talk about, but we'll first start off with Chad leading us off with this article. I guess I'll let you. Is this the correct article?
That's the one. So I mentioned the same website on the last call that we had last month, globestreet.com. I'm a big fan of this website in general. You've got to sign up to be able to read it. So it's sort of behind a paywall, but it's not. You don't actually have to pay. You just have to have your email account with them. And I'm sure that they just do that for data collection and marketing. So if you sign up for a free account, you can access all of their articles, and you can even have them send you specific asset class related articles as well, and so you just get that in your inbox once a week. So I probably sound like I'm a salesman for this company, but I'm actually really just a big fan of it, and I use it myself. So I mostly follow the industrial articles on here, and this is one that came up last week, which I found fascinating. And I think it's an area that isn't talked about much in industrial real estate. And everybody knows how there's supply chain issues all over the world right now, even people that aren't involved in the industry. I've had family members that have no business experience whatsoever that are now saying, so I heard there's some supply chain constraints going on right now. So it's become a buzzword. But I think what isn't being recognized is that as e-commerce continues to grow, there's all that outbound shipments, that's well understood. People can grasp that something comes from a factory or comes from a wholesaler, and then Amazon facilitates that transaction, or any other online retailer facilitates that transaction, then it gets delivered to your door. That process is fairly intuitive. But what is left in the dust is the reverse process when people return stuff. And I think that this will become a problem as more and more people start buying things on e-commerce, which might be better suited to actually be a bricks and mortar retailer sale. Like an example is shoes, right? It's really hard to know how a pair of shoes is going to fit by just looking online, right? Maybe you get some reviews, maybe someone says, oh, it fits a bit large, so get a size down, or however they phrase it. It's really hard to actually just guess. So what I've heard of people doing is that they'll order 3 pairs of shoes. So they'll order a 9, a 9.5, and a 10, and they'll try on at their house, and then they'll return the 2 pairs of shoes that don't fit. And I think that that's going to keep growing, and I think that that's going to be a real bottleneck on the supply chain issues as more and more people start using e-commerce for like that day-to-day stuff. And this article is what it goes into, and we could probably put a link in the description after we go off this, but they basically said that returns are requiring up to 20% more space and manpower than the actual fulfillment. And the fulfillment being getting the product to you. This article says that getting the product back from you, so those 2 pairs of shoes that you don't need, that you ordered 3 for, is requiring up to 20% more space. And a lot of companies haven't necessarily prepared for this wave of returns that could be coming. So if we think that the industrial real estate market is crazy right now, wait until consumer patterns, habits change more, and we require even more space to facilitate all these returns. I think it's a really scary thought at how much of a increase in demand that this could see with a finite amount of supply in the pipeline right now, because it'll take a year, 2 years to get product online right now. So we could see more headlines 2022 about shortages in industrial space and companies having to pay premiums to get the space that they can. It's going to be really fascinating to watch that going forward.
Absolutely. Yeah. I mean, you think about that, it'll dovetail into my article really well. So we didn't plan this, I swear, but it's going to dovetail very well in the article that I have. But yeah, I mean, it's a reversal. I mean, I haven't even thought of it. I mean, my goodness, you bring this up, and I've not sat down to think about it. I mean, you send something back to Amazon, you bring it back to the UPS store, and it goes back to Amazon. That process of bringing that back to their facilities or any other e-commerce facility is kind of a pain. If you've ever been in manufacturing, if you've ever been in a distribution environment, like they're set up to bring in bulk and ship out, bringing things back in does take a lot more time and effort and energy and sorting through than sending product out. So it makes total sense that that's going to be a bit of a bottleneck there.
Yeah. And I'm interested to see from I'd love to see the numbers as to what the cost is for the business to be able to receive the product. Because if this is an increased trend amongst people who are ordering goods online, it's obviously going to affect the bottom line of businesses. So last mile becomes even more important for businesses, because now it's like, okay, we can try to divert returns to a facility that's localized. So imagine like an old abandoned strip center where you can convert into some form of return facility. They can physically go there, drop it off, and then while they're there, there's other products there that could provide some form of upsale opportunity. Again, it's just more to stem the expense, because I can imagine that starts adding up significantly, not only with the amount of space that's required, which is obviously going to increase your fixed costs, but then there's also variable costs, because you're at the whim of FedEx and all these other logistics companies that are returning the product to the company. So do they allow, in order to dissuade people from doing that, are they going to make them incur the cost? I doubt it, because that's kind of the model that Amazon's been taking and other e-commerce companies have been taking. So how are they going to mitigate that cost over time? Because that's going to really affect their profitability, I'm sure.
Well, even just a quick high level example, let's say you order $100 pair of shoes and you order 3 sizes and you return 2 of them. There's some cost that's going to be involved in having those picked up from your house, or if you drop them off at a distribution center or wherever, there's going to be some cost in having that shipped back to Amazon, so then they can in turn ship it wherever it needs to go as well. And if you're paying $15, $20 in shipping costs to return 2 pairs of shoes from Amazon's standpoint, that probably is your profit margin on that. So it's all of a sudden that transaction just became a net zero transaction. And if you do enough of those, at some point it's going to really eat into those corporate profits. So like the point you made about whether the retailer, the online retailer, starts putting those costs onto the consumer and making it that the consumer has to do it. Because if that's the case, then the consumer is going to say, well, I'll just go to the store then, and I'll just go and try these on and not have to have that return cost. So yeah,
or they could or they could spread the cost amongst different things. So, Amazon already increased the yearly fee associated with holding the Amazon membership. So maybe that manifests within there, or maybe it manifests within, products that vendors, maybe the vendors who are putting their products on Amazon, maybe they charge them as an additional fee as opposed to, them taking it themselves, in which case that's going to raise prices on the platform. So it could be hidden, quote unquote, but in reality, it's going to manifest itself in various different ways. And like you said, if it gets to a point where it starts becoming more expensive to source the product via Amazon or some other online retailer, then obviously that makes physical retail more attractive as far as physically going to a location and picking up the item. So it's an interesting problem, but I'm sure over time, as you start achieving scale, you can spread those costs, amongst different areas. So
you guys, you mentioned profit margin for low profit margin products. You guys have probably seen it. I've had it happen a few times for things that I bought that were not $100 or $200 items, but $5 and $6 items where it didn't work, or it was the wrong cable adapter or whatnot. And you try to return it, and they say, hey, sorry, we'll send you the right one. Just keep that one. Here's your refund. And it's less expensive to just say we're sending you another one than to worry about the back and forth of returns. So yeah, there's a lot of thought that's going to have to go into this as e-commerce grows.
Isn't that crazy that it is actually cheaper for them to just let you keep the item than it is to pay to have it shipped? Like, if that's not an inherent problem in this whole system that needs to be fixed, I don't know what is, because that's got to be on the radar of a lot of these guys that are making these decisions, is how they make that more economical.
Yeah, I mean, and a lot of times it's a loss leader. I mean, look at the Costco business model, for example. Like, they don't make much money on any products that they sell in store. Maybe they make a very, very small margin, but the vast majority of their profits are made through the memberships. So that model, it seems to work very well across different industries. So
yeah, and Amazon's definitely not struggling for revenue or profit right now. So it's it probably is a blip right now, but it will be a problem that just intensifies as more and more people start doing this.
Definitely,
for sure.
Cool. It was an awesome article. Thanks for the share, Chad. And I know that this next article is probably going to be very similar. So not similar, but it leads into it. There you go.
It ties very well into this. So this article is about e-commerce and the demand for e-commerce and how it's growing, and how last year it shrunk a little bit compared to 2020. But what I find really interesting in this, and I think it ties really well into what we just talked about, is how some of the traditional brick and mortar large companies like Target and Walmart are competing against the Amazons of the world. So they go into the article about Target and how I believe 17% only of their sales are through e-commerce. The rest of them are in store, but 90% of those orders were fulfilled through their current store location. So they're utilizing their retail stores to fulfill orders on kind of that last mile delivery basis, which is fascinating to me, and the trend that we'll continue to see. And oftentimes I think is going to be the solution for a Walmart or a Target. We've seen it somewhat with Amazon. I know Amazon has partnered with companies such as like Kohl's and other retailers to be able to return items through Kohl's. And for Kohl's, there's probably a little bit of a payment there, but while you're in store, to your point, Raphael, there's an upsell. You now are coming into my store and I've got you here. And that's the whole point of retail. How do I get you into the store? And I think that's going to be a trend you'll see for those companies to combat the returns, but also, an advantage for them that they can achieve that last mile delivery already. So those companies are not looking to go out and buy, 10, 12, 15 different properties that are all 3 million square feet to create mega distribution centers. They're more operating on the basis of, we're going to try to fulfill that last mile delivery. Now Walmart has big distribution centers, so does Target. But it's interesting that they already have that network of locally available stores to ship that last mile delivery from. So it'll be interesting to see how that plays out in those two strategies.
Oh
Yeah, I
yeah.
think that a lot of companies are going to have to take that omni-channel approach where
Mhm.
they're not just one, they're not just bricks and mortar, or they're not just e-commerce, but they've got various ways of connecting the customer with the product that they want. So I think that that will be pretty popular going forward. I'm guessing you guys have seen this as well. Is that I went to a mall last week to try and pick up a last minute present, and it was packed. Like parking lot was packed, the mall inside was packed, and this is
Mhm.
like in the middle of a pandemic still, or at least the perceived pandemic, and people are still comfortable going out and shopping in droves. And I think that there's probably still like some outlier shopping centers, like maybe the ones that haven't been invested in and or modernized. Those ones might be struggling, but for a well located shopping mall that has good retailers in there, it still
Mhm.
seems to be quite busy.
Yep.
Oh yeah, and that's why I think when people make it seem like the retail business is all going to be online, it's not the case. There will be a natural equilibrium point that's achieved at some moment in time, whether
Mhm.
that's 20%, 25%, 30%, that remains to be seen. But
Mhm.
like you said, the omni-channel approach is how the future is going to be because like distribution to be able to deliver a product on site is very expensive. So in order to mitigate those costs, having some form of physical retail could be of value to these e-commerce giants that say, okay, now we can actually have number one, the ability for someone to return it on their own dime because they're driving to the facility themselves, they're
Mhm.
dropping off the product and returning the product. And also, as Logan was saying, the upsell opportunity. So, since it is an opportunity for you to increase revenue and reduce your expenses, it's only natural for business to start shifting that way. And again, I think it having a strong market presence from a visibility standpoint when you're talking about physical retail, that does sell items. And there's a reason why that it's been this way for decades. There's obviously value there. So I agree. I think there will be a point in time where equilibrium is reached as far as online versus retail, physical retail, I should say, but physical retail is never going to go away, in my opinion. But
Yeah,
Mhm.
yeah, and we're still a very, experience-oriented society. I think we love experiences, and I think the Gen Z and millennial generation even more so than previous generations. They live for experiences. You're seeing it in a housing market. Maybe people are buying homes later because they want to put that money into vacations or they want to do stuff. They want to go out and be a part of things. And so I think that's still going to play a factor here in that we may buy things that are kind of a pain through e-commerce, but I think a lot of people are still going to want to go out and be out amongst people. As you said, Chad, it was packed to there. People want to get that experience, and that's something you don't get
Mhm.
sitting in front of your computer. The family goes out together, maybe goes out to eat, buy some Christmas presents, things like that. It's a whole different experience than just sitting on your computer and ordering stuff. So I think that's still going to be a big factor in retail going forward.
What a depressing existence it would be if mankind all of a sudden moves to working from home and only shopping from home, and so would people just sit in their underwear all day
Yeah,
and
yeah,
order stuff online, it gets delivered to their door, they get their meals delivered. Like, yeah,
yeah.
you're 100% right. People do want to go out and they want to see other people and just be involved in that energy as opposed to sitting in their house all day. So I agree. It's there will be an equilibrium point, like you said, Raphael, and that's very well said. And then myself is the same. I don't want to stay at home all day either. So I think the rest of the population is going to make adjustments as new technology comes on board, but nothing's going to take away from that human element of just being around other people.
Sure.
And the vast majority of, and it's pretty surprising. I read a study where it's like the vast majority of retail decisions are impulse buys.
Mm.
Yeah.
So in a situation where you're sitting there having dinner with your family or engaging within an environment, and you just so happen to see across the way, oh, there's an Amazon store there, or oh, there's another type of store there. Let me just pop in real quick, see what's there. Or even
Mhm.
if you're going to the store for an intention, how many times have you gone to a physical retail store and had one mission to go there, and all of a sudden you walk out with like 4 or 5 different items? Like it's
Mhm.
not a
Always.
very uncommon, thing for people. And so, again, reducing the barrier to making a purchase decision is what you're trying to do. And if you can facilitate the fact that there's people going to be physically there, might as well have some form of storefront or physical presence there so that, they have an opportunity to walk in and make an impulse buy. So
Yep. Makes sense.
awesome. All
Yeah.
right. That's great. All right. I'm going to go ahead and share my screen. All right.
I put the link for the article that I had put up in there, but it says private chat. So I don't know if that goes on to the live stream or not, or if there's a way that we could put those links into the live stream that
Oh, we could
there's logins to.
we can drop it in there afterwards. So we'll make sure that people have access to it. We'll make sure that people have access to it so that and we'll also include in the description as well. Can you guys see this?
Yes.
All right. Perfect. Oops. Sorry, guys. Oh, there we are. All right. So this is so I'm very interested in prop tech. I think again, I come from a tech background. I'm an engineer by trade. I got in the software business for about 5 years, and I really value the prospects of prop tech facilitating more effective real estate transactions, and not only that, but making buildings smarter and making having an ability to make decision making more streamlined. And so one of these this article that I saw just shows that private investment in the sector hit 32 billion this year, which is a 28% increase from 2020, and it just continually rises as far as the investment's concerned. Now, most of the investment in prop tech is residential focused. A lot of it has to do with making the transaction of residential real estate more effective. I mean, again, residential real estate, that's a more common transaction than maybe a commercial real estate transaction. However, when I was in the commercial real estate tech conference, or the CRE tech conference, I got to they showcased a bunch of different companies that are out there that are making waves within the commercial real estate industry. And a lot of them have to do with data analytics and predictive analytics, meaning that they take a bunch of information from all these different sources, compile them in a database, and then model out something that is more readable for someone who's a layman. So, what are the trends of office absorption over a period of time within this submarket within New York City, and what is the predictions going forward based on all these different data points? And so that's just some of the companies that I saw in that location, or at that conference. And I also saw several companies that were, companies that aided in the development process. One of them was phenomenal. I forgot the name off the top of my head, but there was one where it was essentially you could have a drone that goes up in the air, and you plot out the size of the land. So it allows you to plot out the boundaries of this particular parcel. And then what it does is it sifts through templates. So, let's imagine that you're Marriott, right? And you have, based on how much land you have available, flat land you have available, you have different configurations of what a hotel could look like. And so for this particular software program, you could filter through these templates, and it could tell you, what the costs of certain things are going to be based on this particular configuration. If it's 100,000 square feet versus 80,000 square feet, how much parking you need. So you can essentially lay out the model for this particular hotel or whatever else before you actually have to go through the process of going to like engineers or architects, etc. So it could help you save a significant amount, at least in the initial feasibility study of that property. And so, these are just some of the prop tech companies that I saw at that conference. And it's just pretty cool to see that we are making a significant investment, because it is part of the future. And historically, the commercial real estate industry has been slow to adopt certain technologies. But I think that as more and more of these companies are starting to realize that it is really beneficial for us to consider augmenting our decision-making process with these types of software products. I think, again, it's going to really help, investors, brokers, lawyers, really the entire industry as a whole. So that was the article that I read, and there's some other article here as well. Well, I guess we'll open it up to you guys. Sorry, I got excited. So
your awesome. Software engineer background certainly shines when you start talking about prop tech. Hey,
yeah,
it's very interesting.
In addition to like all the venture capital that's getting thrown at it, a lot of these big companies are also investing internally, like CB and JLL. These companies are throwing a ton of money at developing this prop tech. And the point you made, I agree with completely, is that commercial real estate for the longest time has been so behind in other more progressive industries at adopting technology, but it's coming now. Like there's nothing stopping this train from going full speed going forward. And I think the companies and investors and service providers that don't keep up with these trends are going to get left behind sooner than they realize.
Yeah.
Yeah.
And reducing the impact too. There's other companies out there that are trying to reduce the impact that carbon footprint of buildings, because I think it's like 40 or 50% of all the carbon that's emitted in the atmosphere or the ozone layer is pertaining to commercial real estate, whether it's the construction of commercial real estate or the ongoing maintenance of the building. So it's much more of an impact even than transportation, which I was pretty surprised by. I didn't realize that was actually the case. So it's one of those things where, you know, the impact of technology that can reduce these types of emissions and reduce the carbon footprint of these buildings obviously can not only positively impact the bottom line, but it could also positively impact society and the earth as a whole. So
Sure. And the speed to market. I mean, to think about the go, no go ability for someone that's in acquisitions, that he needs to acquire land for Marriott, that can just quickly be like, nope. Okay, that one will work. Nope. Yep, that one will work. I mean, how much time would that take? You know, outside of that, oh my goodness,
and
weeks.
money too. I mean,
Yeah,
think about it. You have to contract an attorney and not attorney, but an engineer or an architect. You know, and it's going to take them a couple weeks to get all the documentation worked out, and you probably have fees associated with tying up that land. Especially if it's a really nice piece of land, a lot of times you just put a deposit down and it's a non-refundable deposit because you're competing with a bunch of different potential developers to be able to service or to get that land under contract. And so, you know, there's a lot of costs associated with, you know, not making a quick decision on a parcel. So
absolutely. We were chatting with CoStar in our last training we did with CoStar, and one of the tech that they were talking about, and I don't know if they came out with it yet, was basically a cell phone app where you can scan over buildings and it'll bring up the GIS information right there as you scan over the buildings in real time to say who the owner is, you know, when they bought it, sale history, things like that. That was their plan, was to have that app. So as you're driving for dollars or you're driving through a neighborhood, you know, you can just look at it. And I know a lot of that stuff exists more in the resi side. There's a lot of technology in the resi side for that type of thing for residential investors, but I know they're trying to establish that from the commercial side as well, which would just be a really cool tool. But no, it's fascinating, and it's great that the investment's going there because it's needed. It's definitely needed.
Yeah, and it's very lucrative, you know. So that's why the investment's going there. They understand the implications of having something like that, you know, especially the predictive analytics side. Like, if there's a way that you can predict with relative certainty how things are going to play out over a period of time, like, you know, you're essentially not necessarily predicting the stock market, but again, you're reducing the probability of making a bad decision.
Yep.
Based on augmenting your decision-making process with, you know, software. That's what they're doing at, Ray Dalio over the period of his investment firm. I mean, what he's done is he's literally taken his financial fundamentals of how he assesses stock opportunities or company opportunities, and then he's utilized a computer augmented with computer decision-making process. And he's done that over decades. So imagine you build on top of something like that over time. Now it's like, okay, this computer or this software product or whatever can make quick decisions. And then you as the human still have to make the determination whether or not it's worth pursuing. But if you can cut out the initial analysis and at least get it to a point where, you know, they're making 80% of the decisions, or this thing's making 80% of the computations and decision-making process, it makes it a lot easier to be able to execute quickly and capitalize on these opportunities.
Absolutely.
So it'll be interesting to see what happens farther down the road when everybody's relying on these types of analytics and predictive analytics, because the markets function in large part because there's asymmetries in information, and people can exploit weaknesses in that information, or they can capitalize on it. Whereas if everybody's relying on the same information and it's all computer driven and it's all data driven, in essence, or it could be a perfect market. So it'll be interesting to see what actually happens.
Well, I mean, but you look at Zillow, for example. I mean, the consumer now has access to, granted, estimates or whatever. They always say it's not very accurate, but at least they have availability of data. So everyone has data at their fingertips, quote unquote. But it's still an imperfect market because, again, each situation is different. A commercial office building down the street may be completely different, even though it was built around the same time. Maybe the configuration is is about the same, but if the ownership group wasn't maintaining it properly or whatever else, you know, there's so many variables to consider that the computer cannot compute. It's just impossible. Computers are inherently dumb. Like, you have to tell them what to do and how to make decisions. So that's why humans are making the decision with by augmenting software products, or to be able to present the data in a readable format that then they can interpret and make a decision. So that's
that's well said. And I guess that speaks to why Zillow made such a blunder on having their algorithm based software target all these houses that sent buy signals to invest in, and it turned out to be an absolute debacle is for that reason. I guess I'd love to see this technology develop. I just wonder at what point does that information not necessarily become a competitive advantage if everybody's relying on the same information, as opposed to just having some intuitive feel about what's going to happen in the market 5 years from now, as opposed to just modeling it out on all these computer driven systems. I guess maybe that's just a little bit of a cynic in me, but I still think that a lot of the best decisions are made by people that just make a decision. It's not even necessarily a prudent decision at the time. It's just they made a decision, and the market changed and went up for the better. And I'm sure we all know guys that did this, that bought properties 20 years ago. They weren't geniuses. They didn't have this computer aided decision making. They just were guys that just decided they want to go out and buy property, and they've done very well by it. So it'll be interesting to see, because I'm right in that middle. I'm in that. Well, so are you guys. We're right in that demographic where we are still a little bit old school, but we have that new technology that we're being immersed with. I guess it'll just be interesting to see how people actually make those decisions going forward. And I get one point I'll add on that as well is if you have that computer driven data and it says not to buy, will that influence people to not buy? Because there's always reasons not to buy. There's always more reasons not to buy than there is to buy. But it takes that courageous buyer, that visionary who thinks that the market will turn, or given enough time, they'll be able to profit off of it. If they're getting all these signals that they shouldn't buy, will that impede someone from otherwise making a decision which could have turned out to be a lucrative investment?
Sure. Yeah, no, and ultimately it's your decision to make, and I think that's what it is. It's augmenting the decision-making process. The software product, or the software can tell you this is what's going to happen, or this is what you need to do, but you yourself have to make the ultimate decision. And really, when I'm thinking about, how people make decisions, typically it's based on data that they know, especially those that are really, people who predicted the 2008 financial crisis, for example. They understood the underlying issues with what was happening within the structure of the financial system, right? So if you're able to program something that follows these types of trends, and you can start seeing, changes in certain triggers that you think would indicate a certain function to occur, like if interest rates rise, what does that mean for transaction volume? Typically, it causes issues with being able to finance certain products or certain property types. So if you're tracking that from a software perspective, you could start seeing some indicators. They could indicate what you should do as far as your decision making process, and the computer can do that way faster than you can, and it can also do it in a way that is presented in a way that's a lot more readable and easy to understand. So that's why I'm saying it's more augmentation than it is making the decision for you, because you're right. I mean, you would yourself have to know whether or not you want to take that risk, because again, if it says to not buy, but you think it's going to work out, then you take the risk, and you suffer with the consequences, or if it goes up, then you did the right thing. So,
Yeah. And I think to that point, I mean, there's so much information out there already. And you look at the people who have access to that information. I mean, think of all the podcasts that exist. Think of this. Think of all the information that's out there on how to invest in real estate, and the detailed analysis of finding a property, how to find one, how to analyze it, how to get financing for it, how to raise funds for it. All that information is out there readily available. Yet not everybody does it, even though they know this could be a good thing for their future and a good thing for and so I think it's just companies tend to have personalities just like people do, and companies tend to have risk tolerances just like people do. So I think even though this information will be out there and it'll be faster to get to, people will react to what it says in different ways, entirely different ways.
Exactly.
Very good point.
Well, cool. I mean, I think we had a great dialogue and discussion. I'm glad we were able to talk about some of these articles. They were super interesting. And do you guys have anything you wanted to add?
No, I love it. I love just seeing what other people are looking at and finding insight in. So, I mean, I don't know how many people will have listening to these, at least in the beginning, but if it's just the three of us, I'm fine with that as well.
There you go.
Oh,
No,
for
that's
sure.
great.
And but I think even more so, it's just an opportunity for us to, connect with each other and
Mhm.
learn from each other. Because I learn from you guys all the time. I don't do a ton on the industrial end, and so these conversations definitely help me as far as getting a better understanding of trends in the industrial market, really across the world and the nation, in particular, with the discussions we've had. So I gain a lot of value from these discussions,
Yeah.
and obviously, as
That's
our reach continues to grow, because we're looking to become leaders within our industry. I think it's only natural that people are going to start,
Yeah.
also listening to other
Yeah.
things that we do as well. So
Yeah. I just listen to what Chad says and repeat it. That's all I do. So.
you can't go. I don't think you can go wrong that way, though. Just follow his lead.
Yeah. No, that's
Cool.
awesome, guys. This is fun. I'm in the same boat. I learn from you guys all the time and love all the content you guys put out constantly. It's good stuff. So to be a part of it, I'm just happy to be here in the room, happy to learn from you guys. And it's gonna be fun going forward, seeing what we all
absolutely.
do. So
Absolutely.
Well, cool. I mean, thanks again for those of you guys who are watching this on YouTube. Feel free to like and subscribe to the channel. It really helps with the algorithm, ensures more and more people can hear this message. And again, we really do appreciate you guys tuning in and learning more about the commercial real estate industry, because that's why we're here. We're here to learn and talk and discuss different topics that are happening across the world in commercial real estate. And hopefully, it's been of value to you. And it's always great to see you both.
yeah.
Likewise. And Merry Christmas, both of you guys. Hope you have a good holiday break, and looking forward to continuing the chat in January.
Yep.
Absolutely.
Merry Christmas, Happy New Year.
Merry Christmas, guys.
Okay. See you guys.